and thank you for joining me. This is Total Growth Investing, where price growth is not enough, dividend growth is not enough. We want to identify stocks, funds, and other investments that perform well in both of these measurements, because when we find them and buy them, we can beat the market over the long term. I'm making these videos based on my Total Growth Investing ranked watch list. For a while, I thought coming from number 10 and working my way up to the top would work, but then the dynamic nature of the list itself made that plan fail. Now I'm starting from the top and working my way down. The first video I did in this series was VanEck Vector's Semiconductor ETF, SMH. And then last week I finished the video for number 2, Vanguard's Information Technology ETF, VGT. Now, let's look at number 3 on the list, Tencent Holdings. In the United States, Tencent Holdings is an ADR, an American Depository Receipt. This is a certificate issued by a U.S. bank representing a specified number of shares of a foreign company's stock. For Tencent Holdings, there are actually 2 ADRs in the U.S. markets. I'm choosing to show TCTZF on my watch list, not because that's the version of the ADR that I would want to buy, but because Seeking Alpha keeps the data updated for that symbol better than the other one, TCEHY. There are some important differences between these two, but they both are available through most brokerages. What's the difference? TCTZF has a much lower volume in trades, seen at the bottom of the graph here in gray, likely because this symbol pays the dividends in Hong Kong dollars, not US dollars. TCEHY, on the other hand, has decent volume and pays the dividends in US dollars. The numbers end up the same, but the currency makes for enough of a difference that I guess people don't want to risk it. Math is hard? Who knows? I do know that because Seeking Alpha keeps their database updated on TCTZF, that's where I go to get updated numbers on dividend growth, which is what I need for my ranking system. So, what is Tencent and what do they do? Tencent Holdings is an information technology company focused on internet content and communications. In the United States, we have grown so accustomed to companies focusing their development within specific industries, it might be hard for us to grasp the scale and scope of Tencent and other IT giants in China. There are a lot of rumors and stories about China's Great Firewall and how it keeps U.S. companies out of the Chinese market. And the reverse is somewhat true as well, given the latest headlines. But the people behind these Chinese dragons never let that stop them. The person behind Tencent is Pony Ma. I've been researching Tencent for a while, and there are a number of videos out there that talk about his background and the background of the company in great detail, far better than I could do myself. Pony Ma has done a lot of interviews talking about his philosophy, his management style, and the history of his company. I don't want to just repeat those videos, but I will link to them in the notes. One of the reasons why this video took so long is because I really wanted to read through the company reports to get a better understanding of their history. I did not realize what I was getting myself into. They have published full annual reports every year since they went public in 2004, and they're all posted on their website. The first one is 85 pages, and it just goes up from there. 2019's annual report was 274 pages. Needless to say, I'm still reading, and I will be publishing interesting tidbits of information as I continue. One of the most basic measurements of a company's success is their revenues and net profit. Going through the annual report, here's a basic chart showing those two numbers for the years 2001 through 2019. The 2019 net profit is almost equal to the full revenue number from 2015. Let's look at that same graph in log scale. That's really nice growth. And the interim 2020 report that was just published shows that increase continuing. One of the things I found interesting in the annual reports was the list of major investors in the company, specifically the interests of substantial shareholders. One of the biggest original investors from 2001 was Naspers Limited from South Africa, who bought 630,240,380 shares from the early investors PCCW and IDG Capital. At the time, that was around 35% of the company, and they still hold the vast majority of those shares today. This investment is described as one of the most successful investments of all time. They sold 2% of that stake for $10.6 billion in March of 2018. What was their original investment? $32 million. That's an increase over 17 years of 546,875%. Your mileage may vary. If you look at the top 10 social media companies in the world, Tencent has 3 properties on that list. WeChat at number 5 with 1.2 billion monthly active users. QQ at number 8 with 694 million users. And Qzone at number 10 with 517 million. Those 3 numbers add up to 2.4 billion, but many of that is overlap between the 3 networks, so that's not quite a fair measurement. Tencent describes itself as an investment holding company because they make investments in companies and technology and help it grow over time. They started in 1998 as a simple messaging app and struggled for a while until they found a suite of software and app services that could generate a steady revenue stream. One of their biggest revenue generators is gaming. This is a big focus of a lot of the videos talking about the company, but I'm going to be honest, I don't want to just read a paragraph from Wikipedia. I'm not that much of a gamer myself. I do want to highlight some of their investments that caught my attention. Their first app was an instant messaging service, launched in February of 1999. This was originally a clone of the popular ICQ software, and was literally launched as OpenICQ, OICQ. America Online, who owned ICQ, didn't like that, so the product was renamed to QQ. Because it was their own software, they could continue to add new functionality, and they pushed it into whatever they thought could generate membership, from games to online dating. Originally free, it started requiring a paid membership in 2002, but then dropped that when the other messaging services went free. They do still offer a paid premium service. In the 2005 annual report, they mention an agreement with Boda Investments Holdings Limited to purchase certain intangible assets. This was Foxmail, an Outlook rival that was very popular in China. The investment cost Tencent 15,857,000 renminbi. And in interviews later, Pony Ma mentioned how much he appreciated the customer-friendly user interface and that he had wanted to bring that programming team, specifically Alan Jiang, the lead programmer, into Tencent. They created and launched QQ Mail, a Chinese rival to Gmail from Google and Hotmail from Microsoft. In 2010, Jiang noticed a Canadian messaging app called Kik and wrote to Pony Ma proposing a new project. The response? Do it now. On January 21, 2011, a 10-person team launched WeChat 1.0. The rest, as they say, is history. Let's look at the stock performance from a total growth investment perspective. First impressions, the stock price is currently at $72.90 for the ADR TCTZF. Be aware that there are extra fees at some brokers for ADRs, which I found out when I did some initial checking at E-Trade. And because this is a foreign stock, there will be extra taxes that we have to pay on the dividends. Whether the growth and returns from a stock are sufficient to overcome these extra fees and taxes, I will leave to you. The current yield is very low at 0.21%, but the payout ratio means they have a lot of potential room to grow. And they have been growing their dividend for 9 years, since they started paying a dividend in 2010. One disadvantage for US-based dividend growth investors is that they pay their dividends annually. The next one isn't expected until May of 2021. Their current yield may be low, but what does that mean for long-term investors? For the long term, a better measurement is yield on cost. What would you be getting in dividend yield now if you had bought it sometime in the past? For Tencent, their dividend growth has been tremendous, with a 5-year compounded annual growth rate of 32.67%. What does that mean for yield on cost? Let's look for the answer here on Seeking Alpha. If you had bought the stock 5 years ago, you would be getting 0.8%. 10 years ago, 3.27%. And if you had bought at the IPO in 2004, 83.33%. Not bad. Remember the tremendous return that Naspers Limited had received from their original investment back in 2001? People who bought at the IPO in 2004 have seen a similar rise, up to 42,000%. Ignore the blip in 2014, that's a data error in Seeking Alpha because of the 5-to-1 stock split that year. Naspers sold 2% of their stock in March of 2018, right after the peak in January of that year. It reached that same level in June of this year and has gone even higher since. Looking at past numbers is only half the picture. We want to look forward. And while the payout ratio is a good start, what do the experts say about how the company is going to do over the next few years? Thankfully, we have dividendstocks.cash out of Germany to give us a quick view into those numbers. The first thing I look at here are the stability metrics. Dividend stability is 0.91, earnings 0.90, cash flow 0.90, and revenue at 0.88. Those are really solid numbers. Now let's see what those experts I talked about think we have in store for Tencent over the next few years. This is fair value calculations based on the metrics that dividendstocks.cash has on file. And they have data in Hong Kong dollars going back to the very beginning. Earnings per share is in green, and that is expected to continue to go up. This is where we are right now at 561.50 Hong Kong dollars. And this is where earnings per share shows. Adjusted earnings per share, pretty much the same. Operating cash flow is going up like crazy. They did have a slight bump, but they're expected to recover starting at the end of this year, going up here. Dividends, well, this is what they've actually been paying since the beginning. And let's bring in fair value dividends to make it easier to see. This is what they expect for the next couple of years in dividend growth. But let's take that out because it makes the graph a little bit too big. Fair value based on earnings per share, that's the green line. And it pretty much follows what we would expect. Remember, we don't invest for today, we invest for tomorrow. So even though it might be a little bit overvalued right now, by the end of next year, that's going to change. Let's bring in the other value metrics and see what happens. Okay, so if we bought it here and we chose the middle of those three numbers here, what would we expect if we put 1,000 in, whether that's in Hong Kong dollars or in US dollars? If we put 1,000 in, the capital gains expected by this math, 474.55. The dividends, 1163. I'm not an investment advisor, but I like those numbers. What do you think? Tencent Holdings is in the news a lot. They are one of the largest companies in the world, and they are involved in many different aspects of our online lives. The internet in China doesn't allow big US corporations like Amazon, Google, Facebook, or Twitter. So they have their own giants in place to provide those apps and services. How long will that last? nobody can say. But with the population of China being a staggering 1.4 billion people, and 883 million of those people are already online, these Chinese dragons have a strong foundation to build on. India is part of Asia, and their population is today where China's population was about 20 years ago. And they are expected to grow even faster between now and the end of the 21st century. They have learned from China and are putting in similar bans on foreign companies who want to invest in the India internet markets. Again, no one knows how long this will last or how effective the restrictions will be, but it does affect Tencent's investments in India. Another big developing market is Africa, and remember who owns 31% of Tencent? Naspers Limited out of South Africa. Tencent itself is investing directly in the African markets and has launched versions of their apps and websites for those markets as well. The internet is global, and while governments can try to stop companies from getting across their borders, at the end of the day there is really nothing they can do to stop what is happening. Virtual private networks already get through the firewalls, and technology development is working hard on both sides of the walls to bypass it. The networks are the nervous system of our world, literally the neural networks that are bringing our world closer together. Why anyone would want to stop that is beyond me. The goal of all governments and companies should be to provide all of the needs and wants of our population. Products and services already go from anywhere in the world to anywhere else on the world. Welcome to the 21st century. Is your portfolio ready for this? Thanks for watching. If you liked this video, please hit the like button and subscribe to the channel. It takes me a week or more to research and produce these videos, and while it's a lot of fun, it is a lot of work. Please let me know if you have ideas to make these even better. I'll start working on the next one over this coming week, and I will continue to read the annual reports for Tencent and the other companies that I'm watching. I hope your portfolio stays green and growing.